I want to explain exactly why running this specific bot and using an automated system is far superior to just sitting on a long term investment. Think about it. What do we usually call an investment? We buy an asset, throw it in a wallet, and wait for the price to go up so we can sell it for a profit. Honestly, that's more like waiting than trading. The downside of manual trading, it takes massive amounts of time and focus. Usually, the more difficult a task is and the more time it requires, the more profitable it should be. That is exactly how scalp trading works. A human simply cannot keep up with the volume of a scalp bot, and that is where your edge comes from. Since daily trading is so time consuming and complex, it is naturally more rewarding. Automation gives you that advantage without the burnout. You simply set your parameters, launch the bot, and it trades for you. You'll get real time updates on Telegram if you need them. Even the $7 monthly fee for the VPS is automated. It will just send you one quick reminder a month. Now let's look at the numbers. On my website, I have a calculator based on historical data. On average, the bot generates between 8 and 16% profit per month. In my public challenge, we've seen it hit a low of 7% during periods of low volatility and as high as 16% when the market was really moving. Of course, it depends on the market, but the real statistics stay consistently within this range. It gets even more interesting when you factor in compounding. For example, if you start with an investment of $2,000 and run 10 trading pairs, your projected profit in just 6 months would be nearly $2,000. This happens because the bot reinvests your profits back into the market, growing your capital at an accelerated rate. If you don't withdraw your earnings every month, the growth becomes very aggressive. In 1 year, that $2,000 could reach $6,000. And every following year becomes even more powerful because the bot is trading with a much larger balance. We all know the standard bull run logic: buy during the bear market and wait for the peak. But this bot doesn't just wait, it scalps daily, constantly stacking profits. Take Hyperliquid, for example. It is one of my favorite assets, and I am convinced it will easily clear $100 in the coming years. It is incredibly reliable. Honestly, compared to Chainlink, well, it has way more growth potential. Many people are waiting for hype to get cheaper before they buy. They are looking to enter at $10 or $20. As an investment, that might be fine, but there is always a risk. You might think $10 is the bottom, but then the price hits $5 next year. If you don't have more capital to add, your expectations take a hit. That 10x you were hoping for suddenly becomes a 5x. The bot, it doesn't care. It takes advantage of those small short term movements, locking in wins and slowly accumulating profit, while the investor is still just sitting there waiting for the perfect time to sell. What I'm really trying to say is we can never truly predict the absolute bottom. It's just impossible. That is why when you are investing, you must keep a portion of your capital in reserve. You need that dry powder to improve your average entry price. If the market continues to slide, there is zero guarantee that you will catch an asset at its perfect low. We've seen it time and time again. Prices drop far lower than anyone imagined. If you've already spent all your money, you're stuck with a bad entry price and no way to fix it. Look at the recent altcoin rallies. Many assets struggled and couldn't even reach a basic take profit zone. You can wait for years hoping for a miracle, but sometimes the market just doesn't move your way. With long-term investing, everyone expects that massive 10x gain. But the reality is often much different. After 4 years of waiting, and once you account for inflation, a 3x or 5x might be all you actually get. The higher the target, the higher the risk that you'll never actually sell or lock in those profits. You end up wasting years of time on a price target that might never hit. Let's use Hyperliquid as an example again. Many of us are waiting to buy it at $10 or $20. Let's say you get lucky and enter exactly at $10. You're dreaming of $50, a clean 5x return. But what if the market shifts? It might hit $30 and then crash. You've sat on your hands for years, and your dream never materialized because you couldn't sell at the right time. Now let's compare that to the bot. Take that same $2,000 and put it into the system instead of just holding. The bot trades every single day using a scalp strategy. If you turn on compounding, the bot takes your monthly profit and adds it to your initial capital. Let's look at the math. In a best case scenario, a holder turns 2,000 into 10,000 after 4 years. But with the bot, even in a modest first year, you could potentially see $5,000 in net profit. By the end of year 1, you have 7,000. In year 2, the bot isn't trading with 2,000 anymore. It's trading with 7,000. By the time the holder finally reaches $10,000 in year 4, your compounded results will be so much higher, there is honestly no comparison. That is the sheer power of daily scalping and compound interest. The calculator on my site shows a monthly range of 8 to 16%. Again, this isn't a bank. There are no fixed guarantees. Profit depends entirely on market volatility. Some months will be quiet, others will be explosive. But in the long run, this strategy is far more flexible and profitable. Technically speaking, the bot handles everything through its internal logic. It manages each pair in your portfolio individually. Think of it as an automated portfolio manager. You choose the assets, and the bot executes the trades. This is where diversification becomes your greatest strength. If you follow the documentation and set your allocation correctly, your risks are minimized. Your main job is to make sure you don't overload the bot. Don't run too many pairs on a small balance. More pairs and higher allocation can mean more profit, but it also increases the risk. If you manage the settings properly, the bot will take care of the rest. It will stick to the strategy, follow the risk management rules, and perform exactly as the code was designed to do.